In this lesson, we're going to look at the bearish Kumo Breakout trade setup. Like I said in the previous lesson, I love the Kumo Breakout trade setup. It happens quite frequently. Before we look at a Kumo Breakout, we should look for divergences. If there's divergence, it gives us a clue if the market has a high probability chance of reversing. Now in this example, which is pound US dollar, there was no divergence. But that doesn't mean if you don't have no divergence, the market cannot continue on the downtrend. It can. Divergence just gives us a clue if there's a possible reversal. We have to still look at price action. So in this example, there was no divergence. What we need to look for in a Kumo breakout first, whether price broke and closed below the Kumo. This is what happened over here. This candlestick, price broke below the Kumo. This means the sentiment is bearish. Just because price breaks below the Kumo, that doesn't mean you should enter into a trade. Remember, Ichimoku Indicator is not, you can't use it, you have to use all the indicators as a whole, not just one indicator as a trade setup. Otherwise, most of the time, you'll get stopped out. Once price has broken below the Kumo, we have to look at the relationship between the Tengen and Kijun. Tengen in a bearish Kumo breakout must cross below the Kijun, either above or within the Kumo. Now, many Ichimoku practitioners say that if there's a crossover above the Kumo in a bearish Kumo breakout, this is a weak signal. In my opinion, this is false because the market can still go down if the Tengen cross below the Kijun above the Kumo. This is just telling us what, as analyzing the tool, is just telling us whether the market is bearish or if it's bullish. So you should use it as a confirmation tool, not as a trading tool. We also have to make sure that both the Tengen and Kijun are pointing downwards. If they're flat, the market's static. That means there's no volatility. Most likely, it's going to be choppy. If the Tengen is pointing downwards and the Kijun is pointing downwards, this is a very strong sell signal in a bearish Kumo breakout. So in this example, when there's a Tengen crossover over here, the market went down. It came out of the Kumo. Both the Tengen was very strong because it was pointing downwards. It was steep. The Kijun was also very steep. So this is a good indication of a bearish trade setup. Still, that doesn't mean you should still trade. Then we have to look at if the width of these two lines are too far apart. If they're too far apart, then we should avoid trading. Because again, the Kijun acts as a magnet. When price is far away from the Kijun, then what happens? Price in the downtrend, in the bearish breakout, the downtrend is oversold. So therefore, price will normally gravitate back to the Kijun. So avoid trading this if they're too far apart because you get stopped out. If they're closely aligned, that shows us that price and the trend itself is very strong, very bearish. Now we looked at the relationship and the characteristics of the Tengen and the Kijun, and when price comes out of the Kumo, we have to look at the Chikou span. The Chikou span needs to break below the Kumo in open space. So in this example, as you can see, this happened over here. The Chikou span broke out of the candlestick, had a support over it, rebounded, then it went further long down. Now, when you have the Chikou span is muddled up in the candlesticks, like over here, it shows that market is correcting or the market has no volatility and it's static, it's choppy. You should avoid trading this. This is a good example why many people, when they look at the Ichimoku system, they don't look at the Chikou span. The Chikou span is very important. If the Chikou span is within the candlesticks, avoid trading it. Then we should look at price should be lower than 26 periods ago. Avoid taking a trade if the Chica span is still stuck in the Kumo because the trend is undecided. So when we took this trade over here, we should look at 26 periods ago. Where was 26 periods ago? It was over here. So price was away from the candlesticks. It was in open space. And plus, also, we looked at the previous peak of the Chica span. It was over here. It broke that. It broke the support. This showed that the bears were in control and the bulls were losing. If the Chica span here is stuck within the Kumo, this shows that the trend will not break out. For example, imagine we had a TK crossover over here, which we've got, and the Chica span was ranging within the Kumo. You shouldn't take a bearish Kumo breakout if the Chica span is still stuck in the Kumo because it's most likely going to bounce from the Sing span B, no, Sing span A. Is most likely going to bounce from the Sing span A and reverse. So you should be very cautious. Only consider taking a sell trade if the Kumo sentiment is either strong or medium. We spoke about this in the previous lesson. If the Sing span A is pointing downwards and the Sing span B is pointing downwards, that means the sentiment is very strong for the Kumo. In this example, and if let me just explain the other day as well. And if the Sing span A is pointing downwards and the Sing span B is flat, that means that's the medium strength. So in this example, when we enter the trade over here, the Sing span A was pointing downwards, and the Sing span B was pointing downwards too. You can't see it because there's this arrow, but it was also pointing downwards. So this is a very strong Kumo sentiment. And before I talk about the stop loss, we also have to take into consideration that when we have a TK crossover and you look at the Chica span, there has to be a bearish Kumo sentiment, which happened over here. So if we go 26 periods into the future, there was a bearish Kumo sentiment. That's why we can take a trade over here. Now, where do we place our stop loss? Well, there are 4 places where you can place your stop loss. The first is a flat Kijunsen. So if we were to take a trade over here, we could place our stop loss right over here, flat Kijunsen. The second place where you can place your stop loss is Sing span A, and the third is a Sing span B, and the fourth is the breakout candle open price. Now, if we were to take a trade over here, you can place your stop loss at the wick of this candlestick, or you can place your stop loss on Sing span A, which is here, or Sing span B, which is here. Either here or there. Now, there are 5 approaches where you can take your profit for this strategy. The first example is Kumo shadow. The Kumo shadow, if we're in a bearish trend, you have to look at the left hand side and see a bullish trend. Where the single span B is flat, that's a Kumo shadow. For example, this was a Kumo shadow. But in this example, there was no Kumo shadow. This is used as a reference. Sometimes it works, sometimes it doesn't. So just use it as a reference. The second example where we can take profit is when the current trend is invalidated by a Tegson-Kijunsen cross occurring in the opposite direction of the trade. So when we did this trade over here, the market went down, down, there was a crossover the Tengen at this position. This is where I would take profit because most of the time, when the market does a crossover, there's a change in trend direction. The fourth example where you can take your profit is when price breaches the Tengen. Now, this is not always reliable because if you do take this approach, sometimes, most likely, you're going to miss out a lot of the trend. You're not going to claim all the pips which you can take. You're not going to basically take all the profits which you can fully take. So, for example, in this example, it worked quite well. The price went down. The Tengen was a good, basically, resistance area. But if you looked at the previous example, when we did a bullish Kumo breakout, the Tengen was breaching. The price was breaching the Tengen quite often, and most likely we wouldn't have made that much profit. So I think you should only use this if the news outlook is very bad. Then you can consider getting out of the trade itself. And the fifth example is when price breaches the Kijun-sen. This happened over here, roughly the same time when the Tengen crossed over the Kijun-sen. So thank you very much for listening, and this is the end of the lecture.